Hello, everybody. Welcome to Trading the Close. I'm Drew Dosick, and welcome back to the markets, folks. Hopefully, you guys had a great weekend. Today, the markets came back, and we were met with light volume. Now, with this light volume, we still did drift lower. If you guys recall, this week we do have the FOMC on Wednesday. We're going to have both the minutes as well as the conference. It's going to take place Wednesday afternoon. So I anticipate this week, both on Monday, Tuesday, and on Wednesday mornings to be somewhat muted, right? Getting ready for this FOMC meeting and the results from that meeting, after which we should at least have volatility and volume come back into the market. So far, this December has really been lacking the volume. Quite peculiar. So let's check out the heat or the market summary board, see where everything panned out today. So we see here we've got Dow Jones down 0.42%, Nasdaq down 0.14%, S&P 500 down 0.33%, U.S. oil down 2.13%. Nice drop there on oil. Gold basically flat, down 0.15%. And then Bitcoin is up slightly, about 0.5%, trading above $90,000. So, guys, let's jump into the S&P 500 heat map, see where some of these bigger stocks moved on the day. And you can see big winners over here, AVGO, 2.78% up. We'll check out that chart later. NVIDIA pushed higher, 1.72%. Microsoft up 1.63%. Google did tail off today just slightly, and it did break an inclining trend line that could lead to further downside in the near term. We'll be watching that chart throughout this week. Netflix down 3.44%, but the biggest loser of the mega caps was Tesla, which we're going to check out that stock later on in just a few moments. Let's jump into the S&P 500 displayed by the SPY ETF. And what do we see here? We see price today did retreat back down into this parallel. Like we did fight at the end of last week, Thursday and Friday, to get back above. But guys, anybody that has watched my sleeper hold mastering the overnight trade educational course, what do we have right here? We've got a sleeper hold setup, one that's more exaggerated on the SOXX, which we're going to look at here in a few moments. But still, the sleeper hold is right here, showing us that we were going to be coming down today. Even though, let me flip this on, you can see this too. Look at this volume, folks. This volume today, all the way down here, only 53 million shares traded, completely illustrates what I described. We've got this big meeting coming up. We've got an 89% chance of a Fed rate cut. So it's all but guaranteed that we will have a rate cut this coming meeting. The real question is, what's the dialogue going to be? What's Jerome Powell going to say? Will the volume then uptick after that? I almost can guarantee that the volume should uptick because institutions want to close their positions, at least gets their books in order by the end of 2025 after the meeting, as well as next week should be when that takes place, before the holidays when these institutions go on vacation. So still interesting stuff going on here on the markets, low volume and declining. The S&P 500 area to break is this inclining trend line. We've done it before. Can we do it again after the FOMC meeting? That level here is at $680.95. Next up on the Qs. I've adjusted this parallel to show you. And really, I had two overlapping parallels. All I did was simply delete one, showing the most recent rally and that how it's contained within this parallel. So we see here today, we also did have a down day slightly on the Qs, mainly chopping sideways from yesterday or Friday's closing. So if you're a bull, you want to see consolidation here at this resistance, building momentum for a move higher. Next area of resistance on the Qs for will be this gap fill, $632 back from the candle back here. Otherwise, we are starting to look like we are changing pace, folks. No doubt about it. We're not continuing this uptrend that we've seen. We've now started to mix in some red candles, looking like we're starting to make a little bit of a rounded top, if not just consolidation. So the patterns are changing on these indices. Next up, the SMH. Now, guys, look at this. This is a lot more exaggerated of a move straight up, right? The SMH straight up compared to the SPY. We'll just flip back there to show you. Notice it was straight up here and then somewhat sideways consolidation, making the sleeper hold pattern. The SMH, much cleaner of a move, making a double sleeper hold pattern, going right into previous double tops. Resistance on SMH will be up here, 372.41, the high end of this parallel channel, also corresponding very near the all-time highs up here on the chart, likely looking for some pullback considering this extended move up on the charts. Pullback will catch support at this 50% area, the parallel at $350. Now check out the SOXX. Those that are unfamiliar is also another semiconductor ETF that does have 25 stocks that it follows. And look what it put in on Friday, a daily topping tail, also fitting the sleeper hold pattern, which should lead to more downside. Now, we didn't get it today, and sometimes that happens with the sleeper hold. As you notice, we've got a 50% area of the parallel not too much further away at 321. Even though this is telling me price could come down, you got to think of like bulls like this, guys. It takes a lot of effort to kill a bull. We've been programmed to buy the dip for so long, right? So especially in the semi space, all this AI and tech-driven momentum, we've been having a lot of buyers step right back in. Any dips, buy right back. So that makes sense that when we're making tops, we likely are going to make several dips on the top before we start curling over. I saw a lot of people comment the other week saying, guys, I thought you said the markets were going to crash. Well, yes, that's what the markets are showing, that these big red candles, but we quickly got out of these big red candles, really kind of a head scratcher situation where price should be coming down, but is accelerating up with light volume into the end of the year. Still raising flags of concern. Which side is the institutions on? They're on the side with heavy volume, all right? So usually follow the volume, you usually stay in profits. And light volume is telling me there's not a lot of conviction pushing us back up to all-time highs. Now I'm starting to see reversal signals at the top of the charts. That's telling me we likely are going to be coming down. We'll see if the FOMC supports that thesis later this week. Next up, we got the IWM. IWM, not too much to report, except for this one was a little bit positive, a more positive of an index. You see it closed up on the day, 0.04%, flat, but it still wasn't down. Very nice move, though, on the IWM most recently, pushing up, now putting in a couple days of consolidation. If you're an IWM bull, you want to see this consolidation remain up in this space, at very least not break this trend line here at $245.05. And then that could build momentum for a reattack of this inclining parallel channel. Although the longer this hangs out underneath, the less likely we're going to get up into that parallel, as that's a very steep parallel from that April low that we've experienced. Next up, Bitcoin. Now, guys, I did talk about this too on this show for at least last week and likely the week before. But when price came down into this 50% area of the parallel, all I have to do is look back on the charts. One of the simple things about TA and analyzing charts is that they often like to repeat what they have just done, right? So when the price came in here, broke beneath as far as it did, that was a little bit of a shocker. But then when price came back and has since now chopped, that's a little bit more predictable, because that's what happened over here. All we have to do is look back here. It took about 2 months for price to get away from the 50% area of the parallel. So far, we've only been hanging around this area for about a month. So if we're going to repeat the same thing we just saw, it's likely still going to be hanging around this area about until the end of this month. So be paying attention to that. Obviously, a bull with Bitcoin, you want to get above this 50% area of the parallel at $92,754. Otherwise, the next areas of support are already outlined. They've already been tagged here on the chart. 85,000 will be the minor area of support, since it's been hit now a few times. More solid level will be down here at 80,000. But I remind you folks too, if we do start breaking this area, I scroll back out, look where the bottom end of this parallel is. I'm not saying Bitcoin's going there today, tomorrow, or next week. All I'm doing is showing you what's on the charts and how price can get back down to this area, because that's what's displayed on the charts. So I would say a near-term bottom on Bitcoin, maybe even mid to longer term bottom, could be down here under the $60,000 mark. But first, it's got to beat and break these support levels, which so far it's hanging out and doing pretty well right around the 50% area of the parallel. Next up, we've got gold. Not too much to report here on gold, except for it's down in the lower 50% of this parallel. Not the end of the world for it, because look what it's maintaining. Beautiful bullish consolidation. Now, one thing I have with this, we have a nice wick here and a semi-decent sized wick and here So we've got three decent wicks showing you that there's investors dumping their gold up here above $4,200. Now pushing price sub that $4,200. If this consolidation continues, we could easily catch support right here at $4,145, which still would be in a bullish category considering this angled trajectory down to that support level, which could give it a boost back up to make an attempt to go above 4,200 again. But still, nonetheless, great bullish consolidation occurring here on gold. We'll see where that price action takes us with this conflicting signals of consolidation going on. Next up, we've got silver. Now, silver making much cleaner consolidation up here on top of this 50% area, the parallel. However, folks, I must caution you, consolidation and bull flags at the top of charts likely fail. You may say, well, wait, why does that happen? Well, it's part of the nature of the markets. Usually bull flags work amongst price action where there's previous price action on the charts. But once we get up extended towards the top and start making those bull flags, they generally start to fail. So if I was an investor going long in silver, seeing this sort of price action, even though it could go up, I'd likely be a seller, be waiting for price to come back down to this trend line that you see here around $52.50. And at that point, I would want to jump back on. And of course, though, this is a very steep trend line. So you've got to be nimble, or at least got to plan for other ads on the way down on the chart should and when silver break that trend line, because it's always a possibility. These trend lines do break, but where's the next level that can help you get back into the profits? We'll determine that when and if price starts coming down there here in the next couple of days. All right, next up, U.S. oil. Here you see here on U.S. oil, nice down day today, getting back inside that red candle, getting towards the top 50% of it, and then declining back down on the charts. Guys, this has been somewhat redundant of analysis, but still it's in a nice bullish consolidation phase. Although the near term with this red candle tells me there could be a chance of breaking the most recent lows. So a little bit of conflicting signals going on this chart too. That's all right. Oil has basically remained flat for the last couple weeks, if not couple months. Interesting price action on oil to the upside, resistance of $61, to the downside support, $57.15. Next up, look at this decline, guys, on nat gas. We were looking like we were going to rip up, tag the top end of this parallel channel at $5.47. But today there was a huge rug pull. Now notice, though, where price closed the day, right here on this inclining trend line. Now this inclining trend line, as you see here, has been tagged now 3 times. Normally on the 3rd time of being hit, we should get a decent bounce. We'll see if we get that generated tomorrow on nat gas. If so, it could actually build enough momentum to push it up here to the top end of that parallel before then curling over and testing this trend line again. Still great selling pressure tomorrow. If you're bear on nat gas, you want to see this trend line get broken. So tomorrow, that value, $4.70. If that level gets broken, that could then increase probabilities for the support level to get tagged. All the while right now, price is still above this trend line, so it's still saved for the near term. Next up, Carvana. Now, Carvana had big news today, folks. They were included in the S&P 500. It was announced late last Friday after hours. You can see here the market has pushed Carvana up over 12% on the day. Did have a nice little curl over right at the 455 level. And the volume on it was actually pretty decent. But here's what happens. When the S&P 500 does add a new stock like Carvana, you have all these other ETFs, these other indices that follow the S&P 500 that have to add those stocks to them. That way they can monitor them, track them accordingly, and get in line with all of the rules and regulations. So a lot of this was forced buying. So it was forced buying, selling the stock up on Carvana. If we step back out into the daily time frame, we can see we've got an inclining trend line that should be resistance potentially tomorrow on Carvana, right around the $470 level. Plus, we've got this beautiful inclining parallel channel. Right at the top of it is going to be near the $500 level. I suspect both of those levels will have profit takers. If we get up to the $500 level, that would be a great shorting opportunity. Look at all of these green candles extending price up on the chart of Carvana. That should be an area right here at the top of the parallel after it's now broken and negated this topping tail. So we can delete that off the charts. But that zone should be above 470 to 500, a great area considering this march up that's occurred on Carvana to short. All right, next up, AVGO. Now, AVGO was one of the big winners of the mega cap sector today. And we see price went up today and hit the brakes immediately on this trend line. Now, price today was trading pre-market at around $406. This trend line was basically at 407, and that's all the distance it went after price action opened up this morning. Yes, we gapped higher, but I was anticipating price at least to tag this inclining portion of the parallel right around $414.64. Didn't have that happen today. That could as well occur tomorrow, which could be a great area of resistance potentially for a day trade. Tomorrow's value at $415.36. But great move and reattack, making new all-time highs for AVGO. It didn't close at new all-time highs, but it did tag and make new all-time highs today. Nice push there on AVGO. Next up, Tesla. Nice drop today on Tesla, down 3.39% after tagging this resistance level. We had this on the chart. I conveyed it to you over the last couple weeks. That clearly was a spot that did work and had price pull right back down on the charts. Scroll back out and show you here, even with this decline, nothing's damaged on the chart of Tesla. We still have a larger inverse head and shoulders pattern that's coming off the charts. That does have a measured move up here to $512.97. This is one of the major outliers for the mega caps that still does show it's got some upside potential before any sort of downturn from all of this momentum building the markets back up and pushing us to all-time highs. So we'll be watching this closely. If this parallel breaks, as it's done before, will the support hold here at 385.95 cents? If so, this target is still valid up here, 512. We can jockey around in this range for quite a while, make bullish consolidation. If you zoom out on the weekly time frame, you see here, it's just a lot of chop, a lot of sideways chop. So if we get outside of that realm, then that starts raising flags as to, we're starting to break down, or the breakout's occurring as should happen according to the plan of this displayed pattern on the charts. Now, lastly, we've got WBD. Now, WBD has been in the news over the last week because Netflix has placed an offer to take them out. You can see here their offer is at a 27.75 per share takeover. But then Paramount came in today with a hostile offer and did offer $30 per share for the takeover bid. And here's the great and simple thing to do, guys, whenever you're getting this news, you want to jump on board, you don't want to be left behind. Usually when these buyouts occur, they're not finalized right now. It's just announcements. Basically, WBD has selected Netflix as the leading candidate to buy them out. So this $27.75 takeover price has already been tagged today. Plus, that deal's not finalized. They need to work through all of this. So these are hypothetical situations that usually drag in retail investors and say, oh, well, the stock price is said to go to $30. It's at 26. Well, I'm buying it all in, right? Well, no, because the deal's not done yet. They need to go through regulations, get everything checked. So there's chances this deal may not pan out. Now, if it pans out, then yes, the price is going up there. But at this point, it's likely best to just sit back and watch the stock. A lot of cases, not taking a trade will help save you money. And that's what I'm giving you as a little tidbit of info. Whenever you hear these buyouts, sit back. The company getting bought out, don't even trade it. Just sit back and watch the price action. The company doing the buying, like Netflix or potentially Paramount, trade those. There's where you're going to have volatility. Those stocks, you're going to have opportunities to go long or to go short. All right, guys, that wraps up Trading the Close. Thank you guys so much for tuning in today. Don't forget to like and subscribe, and also send this out to your friends and family so they too can learn technical analysis and make money at the comfort of their own homes. All right, guys, we'll see you on the charts tomorrow. Until then, have a fantastic day.